Hi to everyone, welcome back to another video session on the part 2 of economics subject is concerned. See, in the last class we have started with the topic called Introduction to Macroeconomics, and we are heading to the next chapter under the macroeconomics, that is all about national income and accounting. National income accounting. So before getting to this chapter in detail, let's go through the weightage part of this chapter. That is about 1 mark 1, 2 marks 2, then followed by 4 and 6 marks 1 question, then followed by the last one POQ question from this chapter. And moreover, this chapter is a weightage of 20 marks. Now coming to the meaning and definition of this chapter. Before leading to the concept called national income and accounting of it, so far better you need to understand some of the keywords of today's discussion. That is about GDP. Okay, so GDP, the acronym of it, where we can expand as a gross domestic product. In simple, the capacity of the country in connection with the monetary value of final goods and services. If that is a point, then why it has been divided under the concept of the macroeconomic branch. Okay, so as we know that economics has been divided into two broad branches. First one is called microeconomics and next one is called macro. So why the point called national income, the GDP, it comes under one of the macroeconomic issue, and why it become a hot topic and burning issue in case of n number of medias. So why the much more discussion has been made on the concept of GDP is concerned. So let me tell you, the first of all, GDP, the gross domestic product, it's an indicator of a country's wealth. The point of the macroeconomic issue, which states about the overall performance of a country at large, which deals with the aggregate output of all final goods and services which have been produced in a country, which have been counted and which have indicates the overall performance in financial terms. Then that is called a GDP. So the point is very clear here. So national income accounting is one of the macroeconomic issue. So one of the economical issue which deals with the collection of facts and figures which concerned with the aggregate performance of the country or overall performance of the country. If that is the case, then GDP acts as a barometer, GDP acts as an indicator, GDP acts as an index of a country's performance. So today, if you wanted to judge any of the country's performance, you're not going to see the streets or the number of villages or the states and all. If you wanted to judge, so how you want to judge a particular student at the academic performance at the end? By putting some exams like annual exams and all, and the mark sheet by seeing the percentage. What is throughout the year? What is the percentage? It may be the grades like ABCD or percentage for first class, second class, distinction, topper, or whatever. Likewise, if you want to judge the country's performance or overall country's barometer or index, so where we can take it into consideration, then that is called gross domestic product. Then that is called GDP. And we use we can even call it as a GDP and the national income synonymously. Two terms are which indicates the same meaning. But today's discussion is about not just as a national income. Today we'll discuss about how the national income is accounted. So you people better understand the word called accounting. It's a process of identifying, summarizing, okay, and classification of all the transactions which are related to the business, okay, made a final balance sheet and all. That's a story where we people have heard in the concept, in the concept of the accountancy or in basic terminology for accounting. But here, accounting refers to whatever the final goods, whatever the services which have been produced in a country, and the monetary value of all the goods and services which have been produced, which have been turned out in the final good and counted in a year without any duplication, and the monetary value of it, then the entire process of value is called as a national income. So today we'll discuss about the term, the word called national income and how it is accounted and what are the basic terminologies of it. So let's welcome all of you. While coming to the meaning of the term called national income, in general parlance we can highlight as the monetary value of all final goods and services which are counted in a year is called national income. For this you need to understand the one word, and that is called final goods and services. So listen carefully. You people have already heard about the different types of goods in the chapter called the theory of consumer behavior and the demand analysis, where you people have come across with the four types of goods like normal good, inferior good, okay, the substitute goods and complementary goods. That is a point where we have taken for the understanding how consumer behaves to the point of microeconomics. But here there are different types of goods will come again. Then that is called like consumer good, intermediate good, okay, so capital good, final good. That the thing we'll discuss in detail later when we enter to the basic terms and terminologies of this chapter. Now coming to the word, so there is a n number of goods have been there in the market, and we are concerned with the only the good which have been taken into consideration while calculation of national income, and other good is called which good? Final good and services, okay, which have been counted in a year. Which have been counted in a year is called national income. So coming to the meaning, if this is a thing, then if you want to define in a definite term, so the same definition has been elaborated by another committee in India, which is also called as National Income Committee of India. National Income Committee of India in 1948. They defines national income as it estimates the value of all goods and services turned out in a year, counted without duplication. That is an actual definition which is given by the National Income Committee of 1940 in India. So it estimates the value of all goods and services turned out during a year. Okay, turned out in the sense there are n number of goods are there which have been produced by one producer, again used by some other producer as an input, again the output will be produced by some other producer. When the n number of intermediate goods are there, final goods are there, consumer goods are there, capital goods are there, and we are concerned with only of those goods which have been turned out during the year. In simple, then that is called final good which have been counted without any duplication. Then that the monetary value, money value is called national income. So coming to the once again, National Income Committee of India, they defines that there are the n number of goods are there in a market, like the goods which have been meant for final consumption, consumer good, the good which is produced by one producer, okay, as an output become again input for some other producer, like in case of a wood, okay, wood items or any kind of a cloth and all. So from the farmer, the raw cotton will be produced, then again it is turned as a pure cotton, then threads, then cloth, then garments, okay. So for every producer it is an output, again it becomes an input for a number of other producers, and those goods will not be considered in the national income, and only the final good which is marketed for a particular price which have been turned out during a year, then that the good which have been taken into consideration as a final good, okay. And considering the monetary value of all those final goods which have been turned out, okay, in a year, counted without any duplication, then the value of this good is considered, then that the point is called a national income. Likewise, some other definitions are there of the same term, then that is called national income, which is given by some of the thinkers under the macro economic issues, then that the person named called Simon. So while coming to the definition which is given by Simon Kunz, he defines the term national income, then how it is accounted. The national income, according to him, national income is the net output of commodities and services flowing during the year. So you need to understand the word called what is flowing during the year. Then why he has taken not month, so why known is a year. From the country's productive system, again you need to understand what is our country's productive system is, and in the hands of ultimate consumer. So now coming to the point, it's all about not an income of a particular state or area, it's all about the income of a country. So when the income of a country comes, then we have to consider each output which is produced by each sector in a country. Either it will be a primary sector or secondary sector or tertiary sector. Then we have to consider both commodities as well as services. Then in such case, in a country, in the production sector, whatever the n number of divisions are there, either primary, secondary or tertiary sector, from all the sectors, it's a net output of all those commodities and services flowing during the year. Net output in the sense, by deducting the whatever the cost, whatever the amount of expenses are there, or depreciation cost and all, but deducting all those expenses and all, whatever the net figure which have been marketed, then that is called a net output or exact value of all those commodities and services during the, which are flowing during the sense, whatever the goods which have been produced either from the primary sector and secondary or tertiary, but mix up of all the sectors, whatever the goods will come and the monetary value of those goods which have been counted in a year. Then the year which states about the country's complete performance. Then the performance of the country which have been taken from the country's productive system, not from some other country's productive system. So we have to take into consideration, if we wanted to judge the performance of the complete country's performance, then we have to take the value of all those commodities which have been produced in a country. Okay, so not those the value which have been produced in somewhere and has dumped in the country. Okay, if you wanted to truly judge the country's performance, then we have to consider the monetary value of all those final goods and services which have been produced in a country during a particular period, like particular term, like 1 year. That too from the country's productive system which have been flowing, not from some other country. If you wanted to judge a country's performance, then you have to take all the contribution made by all the sectors of the country, not from some other country. You cannot judge your own country's performance, like what media is doing now. Okay, so if you wanted to judge the performance of the GDP and then GDP of the country because of this country and that country, so this kind of a stupid conclusions one cannot draw. So GDP is all about the performance of the country. So likewise the national income, if you wanted to account it, then we have to consider whatever the final goods and services have been produced in a country's productive system which have been flowing from the country's productive system, in the sense only from the country's output in the hands of consumers of the country, then which is marketed, ultimately hands of the consumers which have been marketed in the people of the country, which are when they pay the price, then the value it is counted in the national income. For this, you require not 1 day or 1 month and all. It's almost complete theory of a 1 year process. And this the information is directly or indirectly collected by the Chamber of Commerce or NSSO department or Central Statistical Organization. They used to collect all the information from all the sectors. They will submit to the concerned department. From that, the n number of economic policies will frame. So regarding of that thing, so we will discuss in detail. So about how the economic policies have been framed in a country. But before that, once have a glance with the topic what national income accounting according to the Simon Kunz, he defines national income is a net output by deducting almost all the expenses. So what is exactly the output in the market of the commodities and the services flowing during the year, like in a particular period, from the country's productive system, not from some other country, where it considered only the country's output by the producers of the country in the hands of consumers. So regarding of this thing, so in the next further video, we'll discuss about the basic terminologies where which people need to understand the terms called the final good, the consumer good, and followed the intermediate capital goods, the basic terminologies. of calculation of national income accounting. And moreoverly, and this chapter is a weightage of 20 marks. So when time comes, at the end of this chapter, we'll discuss about the related topics, including the POQ, including the question paper pattern, and as well as a question bank too. So I hope you people got understood this thing. So if there is any doubts in connection with that thing, so you may contact me. The concerned number, it is there in the description button. Thank you.